Well, India is in a large infra and industrial capex cycle. In this context, as promised, let's invite Sorab Agarwal, who's the Executive Director at Action Construction Equipment, to discuss the outlook for 2023 as we head into New Year and the demand prospects as well. Mr. Agarwal, good afternoon. Thank you so much for joining us. Quarter 2 has been really strong for the company, record performance across the board as well. Can you give us a sense of whether Quarter 3 has been as good as Quarter 2? What is the outlook for the second half of the year as well, considering the demand scenario that we are in?
Yeah, good afternoon. Yes, Quarter 2 was pretty good for us, and I think we are going to improve in the current quarter revenue, but even in terms of margin, which I think are on the increase as of now. The demand scenario is pretty good. So going by that, I think the second half, Quarter 3 and Quarter 4 are going to be good. And generally, if you look at our past trend also, we do about 55-60% of our business in the second half. So it appears that we are on track as of now.
Okay. So could you give us an indication of what the revenue guidance for this year will be? When we last chatted with you, you had indicated that the material handling agri equipment revenue growth will be about 15%, construction equipment growth 35%, cranes 25%. Any changes to these numbers? Any improvement from when we last spoke?
Yeah, I think what you just said is what we are on track as of now. There is definitely a scope of improvement in these percentages which you mentioned. And on the whole, as a company, we should definitely be growing by 25% in this year. It could be slightly more than that time.
Where is it that you see a chance of a positive surprise?
Our crane segment as well as our construction equipment segment.
Oh, okay.
So that seems to be on the roll as of now. Because infra activity all across manufacturing and even real estate has picked up very well in the last 3-4 months.
Okay. So, Mr. Agarwal, has it led to a higher capacity utilization as well? In Quarter 2, you had mentioned, and earlier as well, that by end of FY23, utilization across the segments will increase by 10 to 15%. What is it currently across your segments?
See, if we talk of crane segment, the capacity utilization has increased by 10-15%. It's touching about 75-80%.
Okay.
Similarly, in construction equipment is increased by 10-15% and metal handling as well. Agri about 5% increases there.
Okay, so the numbers would be around 70-75% for cranes, around 70% for material handling, construction equipment as well, around 40%, and agri you are saying around 5%. So 45% would be the number here.
I would say slightly better, maybe 75% on cranes as well as metal handling.
Okay.
And about a 50-55% on construction equipment, about a 45% on agri.
Okay, so is this the peak utilization level for this year?
I think so, yes, and that will lead us into doing our maybe our biggest quarter ever as well.
Okay.
You think Q3 could be your best ever quarter with record revenues?
Yes, in terms of revenue, in terms of let's say overall profits.
Okay.
And then I'm sure we are looking at even a better Q4.
And Q4 should be better than Q3?
Yeah, generally it is.
Generally it is. Okay. Can you talk a little bit about the agri equipment segment? Because there the revenue growth rate is tracking lower than the company average. Your margins in the prior quarter were also lower, just down, I think, about 2% in the September quarter. What's the outlook particularly for the agri segment?
See, on the whole year basis, I think that we'll be able to grow about 15%.
Yes.
And then because of, unexpected inflation and rather killing inflation, margins also went right into the dumps. So hopefully we'll start to recover from this quarter onwards and then we'll build on that. And, if I talk of FY24 again, I think we should be looking at 15-20% growth, if not more, here again.
Okay. Let's talk about your expansion plans. You were looking at an inorganic expansion is what I believe. What is the hurdle here? Anything that you've finalized? What is the kitty for this acquisition that you're looking at? And the African expansion, any update on that?
See, we were looking at 3-4 acquisitions, a couple of them smaller ones, which we have already executed in the last, I think, 1 or 2 quarters. But they're really smaller ones just to consolidate ourselves in the lower end of the market. Apart from that, we were looking at backward integration and obviously a similar player, much smaller than us. So, things are sort of moving on track, a little delayed here and there because one of those companies has actually gone into IBC, so it might take some more time. And on our African front, that project is very much on. We are waiting for the letter of credits to come in from Exim Bank of India. So hopefully execution should start within Q4, and the full benefit of revenue should also trickle in into, let's say, FY24.
Okay. So two-part question on the answers that you've given. First, what is the kitty of the acquisition that you're looking at? Will it be funded internally, or will you have to go ahead and take some debt? And the African expansion, which will fully come on board, say, from FY24, what kind of initial contribution will it see in the books?
See, with respect to acquisitions, we do have a cash kitty of around 250 to 300 crores. And I think our budgeted expenditure would not be more than 150 crores. So I think we are very comfortable there funding it internally. And with respect to money involved in the African project, see, it is primarily there's going to be a mobilization advance. So practically it will not hit our cash flow at all. And we'll be paid upfront or in advance of the project.
Could you give us an indication of how the order wins for the company have been? That's not a number that you disclose, but tell us the order wins in the December quarter, which is expected to be fantastic for you. How much better would it be compared to, say, 6 months ago, just to get an understanding of the capex cycle and where we are currently?
See, Q1 had become pretty slow because of the war, all inflationary pressure. Q2 is generally slow for our industry owing to rains, and it starts to improve in September. So I can say that with respect to order booking and inflows, it's about 30 to 40% more as compared to Q2, which started improving in September. And going forward, the way we are ending December, I think one of the strongest Decembers with respect to pending orders to be executed in January and February.
FY23 order inflows versus FY24?
Pardon me, please?
FY23 order inflows, how would it compare with FY22 order inflows? How much better?
Oh, I mean, it's definitely much faster. I would say 25-30%.
Okay. So last question before we let you go. Defense segment, that has also been contributing fast to your kitty overall. What has it contributed so far? The last time that you had spoken to us, you said maybe 100 to 150 crore rupees. Will you be doing better than that? Because a lot of orders or proposals have been floated by the government here.
See, in the current year, I think it should be upwards of 100 crores. The overall execution may be close to 115, 120 crores by end of March. And definitely next year, we'll be looking at bettering it. And like you mentioned, there's a lot of focus from government. And recently, again, they've released about 85,000 crore budget for local procurement. So a lot of things which were stuck have started moving. And hopefully, we should be getting good fresh orders, which would be executed in the next year. But adding here, apart from defense, we had also been working very hard in the last 2-3 years on our export front. So there again, we've started seeing reasonable traction, and we've also started exporting machines to countries like Brazil, Argentina, and very recently we've added Turkey in our list. So hopefully there again, we are on track to attain our 10 to 15% revenue share coming from exports, which we should be able to do in the next 2-3 years.
I remember the last time you told us that export revenue should cross 100 crores, I think, in FY23. That's what you had indicated. But thank you very much, Sorab, for joining in. And look at the way the stock has rallied on your comments. The management of Action Construction Equipment saying that things are looking up. Q3 is likely to be the best ever quarter for them in terms of revenues and profits. And there is a possibility that Q4 could be looking up as well. Construction equipment, cranes, these businesses are tracking sort of without committing. He did indicate that there is a possibility that they could be able to beat the guidance.